Hey everyone, Anand here. Welcome back. After diving into concepts like CAGR and XIRR in our previous videos, I realized it's important to cover some of the common financial terms that everyone should know. So, I am starting a new series where I will attempt to break down these essential terms for you. Today, I am kicking things off with one of the most fundamental concepts, revenue or sales. In this video, we'll break down what it means, why it matters, why revenue is just the beginning, and how I use this using LBI. Let's jump right in. Let us start with a simple example. Imagine a small business that sells handmade candles. If this business sells 1000 candles at $10 each in a month, the revenue for that month would be $10,000. More sales generally mean more revenue, which can indicate a growing and potentially successful business. Revenue in the financial world works the same way. Companies like Apple, Google, and Microsoft, or even your local grocery store, all generate revenue by selling products or services. This revenue is the money that shows up at the very top of a company's income statement, and hence it is also called the top line. At times, it is also called sales or turnover. So, why is understanding revenue important? It's a good starting point to gauge a company's overall performance. However, just by looking at the revenue of a company, even if it's a huge number, nothing much can be concluded about the value of the business. However, high and growing revenue can be a positive sign, indicating a strong demand for what the company is selling. For example, if a company's revenue keeps increasing year after year, it simply suggests their product or services are popular and they are attracting more customers. However, revenue isn't the whole story. High revenue doesn't always mean a healthy business. Let's say a company sells a lot of products at a very low price just to compete with its competitors. They might have high revenue since they are selling a lot of products, but since they are selling things for cheap, their profit margins will be low, meaning they are not making much money on each sale, and it could be a red flag for the investors. Remember, revenue is just the top line. We need to dig deeper to see how much profit a company is actually making from that revenue. In the next video, we will explore gross margin, which goes beyond revenue and shows us a clearer picture of a company's profitability. When I'm analyzing a company's stock using LBI, I generally consider the following points with respect to a company's revenue. First, the business should have grown its revenue in the past 5 to 10 years at a reasonable rate. If the revenue dips for a couple of quarters here and there, it should be fine, but the overall trend should be upward. Second, a consistent decline in the revenue over more than a few quarters may signal troubles ahead. Perhaps they are losing market share or facing increased competition, and we need to take a deeper look. Another point is, business should be able to grow its revenue in future by selling its product or services. Let us first understand, why is a company with growing revenue and increasing demand attractive to investors? Well, higher sales means more profit. If a company is selling more product or services, it translates to higher sales. With higher sales generally comes higher profits, which is what ultimately drives a company's stock price. Another point is that a company with increasing demand is likely offering something customers want and need. This suggests they have a sustainable business model and the potential to keep growing in the future. This future growth potential excites investors as it could lead to a higher stock price down the line. The big question is, how do we judge this? In this regard, reading the company's latest annual reports and quarterly results can reveal their plans for expansion, new products, or entering new markets. Additionally, understanding the growth prospects of the industry the company operates in is also important. Is it a growing industry with increasing demand? Understanding the industry trends can provide valuable insight into the company's future revenue potential. If a company is not generating any revenue, and believe me, there are some that simply says the company is selling dreams of building castles in the air, and I just take a pass. They might be a great idea on paper, but without actual sales, they are never going to generate any income. In the end, I also keep in mind, as mentioned earlier, revenue is just the starting point and it doesn't tell the whole story. Revenue alone does not account for any cost, and a growing revenue may not translate into profitability. That wraps up this video. I hope you found it informative. Feel free to leave any questions you have in the comments section below. And if you would like to be part of my journey to learn, invest, and learn, then be sure to subscribe to my channel. See you in the next video.